Welcome to the Daily Market Recap. Today is Friday, August 21, 2026. And we are off Wall Street. Ended today's session on a choppy note as investors carefully weighed surging Treasury yields against persistent hopes for monetary easing. The major averages fought hard early on, but afternoon profit-taking and mega-cap technology left the broader market searching for direction before settling into a mixed close. Taking a look at the sector leaderboard, energy and utilities stole the spotlight today, catching a solid bid as crude oil prices stabilized and defensive income seekers stepped up. On the flip side, consumer discretionary and tech felt the heat, dragged down by elevated bond yields and cool-offs in momentum heavyweights. Checking in on market sentiment, the CNN Fear and Greed Index sits at a comfortable 55 today. That keeps us sitting right in neutral to slight greed territory. Traders aren't running for the hills, but they're definitely keeping one foot near the brake pedal as macro headlines keep everyone on their toes. Header story of the day, all eyes across global finance remain laser-focused on the Federal Reserve as bond yields fluctuate ahead of the upcoming Jackson Hole Symposium. Markets are pricing in high odds for a rate cut at the next meeting, but hawkish commentary from central bankers has traders treading cautiously. Any surprise signal from Chair Powell could unleash massive volatility across equities. In our second major story, Wall Street is engaged in a fierce tug-of-war over artificial intelligence capital expenditure. Big tech titans continue pouring hundreds of billions into next-gen data centers and custom silicon, providing a huge lift to chip makers. However, skeptical analysts are demanding faster bottom-line returns, fueling sharp sector rotation across value and growth. Finally, the latest wave of quarterly retail reports provided a fascinating look into consumer health. While discount powerhouses and value-oriented retailers reported steady foot traffic, mid-tier and high-end brands signaled margin pressure and shrinking basket sizes. The takeaway is clear. Consumers are still spending, but they are hunting aggressively for bargains. Uranium Energy Corp went vertical today, blasting higher as the nuclear energy trade catches fire once again. With global power demand soaring to support AI data center expansion, institutional capital is pouring into clean baseload energy providers. UEC surged on massive buying volume, ripping straight through key overhead resistance levels. Robinhood Markets enjoyed a monster session today as retail trading activity spiked across equities, options, and crypto assets. Wall Street analysts issued bullish upgrades following strong monthly operating metrics and rising net interest revenues. Retail momentum is back in full force, and HOOD is capitalizing on every bit of it. Quantum computing player Rigetti Computing exploded higher today after reporting a massive 185% year-over-year Q2 revenue surge, driven by accelerating deliveries of its Novera quantum hardware. Investors piled into RGTI as enthusiasm around hybrid quantum classical supercomputing testbeds sparked a massive speculative rally across tech feeds. Leading today's drop, Seabridge Gold took a noticeable hit as precious metals miners faced heavy profit-taking following a strong multi-week run. A firming U.S. dollar and rising real Treasury yields put pressure on gold equities across the board, leaving SA shares nursing significant single-day losses. Bitcoin miner Hut 8 Corp took a slide today as lower mining margins and rising network difficulty weighed on sentiment. Despite holding a substantial treasury of self-mined digital assets, operational cost expansion and dilutive financing concerns led traders to pull profit off the table, pushing Hut into the red. Chinese e-commerce giant Alibaba slipped lower today following a mixed earnings report. While its cloud unit delivered an impressive 45% revenue growth surge, adjusted earnings missed analyst estimates. High domestic competition and ongoing economic headwinds in China drove short-term profit-taking after the stock's recent rebound. Turning to the technical charts, the SPIY is consolidating near the critical resistance zone around 565 to 570. Bulls need a decisive daily close above 570 to reignite the breakout toward fresh highs. On the downside, immediate support rests at 558, with key trendline support waiting further down at 550. Looking at the tech-heavy QQQ, price action is hovering around the 485 level. Buyers are putting up a strong fight to defend the 480 support zone, eyeing a potential launch pad toward resistance at 495. If 480 breaks to the downside, prepare for a potential retest of 472. Meanwhile, the small-cap Russell 2000 ETF IWM is battling right around the pivotal 280 into 220 area. A clean breakout above 222 could trigger a massive catch-up rally across broader equities, while key support sits firmly at 212 near its 50-day moving average. In the crypto space, Bitcoin is flexing its muscles, pressing up against major resistance near the $68,000 to $70,000 region. Institutional ETF inflows remain strong, and liquidations of short positions are fueling sudden intraday surges. Immediate key support on any pullbacks rests around $64,500. Ethereum is consolidating smoothly just behind Bitcoin's lead, holding steady above the critical $2,600 floor. The bulls are looking for a breakout past overhead resistance at $2,800 to clear the path toward $3,000. Staking participation and steady Layer 2 activity continue to build a strong foundation. The broader altcoin market is seeing lively rotational action. High throughput Layer 1s and AI-linked crypto protocols are outperforming the pack today, while older legacy tokens lag behind. Overall, crypto market capitalization is holding firm above $2.3 trillion, showing that risk-on appetite is alive and well.
To wrap things up, overall market sentiment remains cautiously optimistic, while choppy bond yields and macro headlines create short-term noise. Underlying earnings resilience and expected rate cuts are keeping buyers ready to step in on dips.
Looking ahead to tomorrow, keep your radar locked on fresh economic data, jobless claims figures, and upcoming Fed speaker commentary. These catalysts will dictate the next short-term move, so manage your risk wisely. That's a wrap for today's market recap. If you found this breakdown helpful, smash that like button, hit subscribe, and ring the bell so you never miss an update. Thanks for watching, and I'll see you in the next video.